Shares of Bank of America rose on Monday after the second largest U.S. bank reported a smaller than expected 13% fall in profit for the first quarter. The other big U.S. banks all reported first quarter profit declines last week. So far this year, investment banking has taken a hit as geopolitical turmoil in Europe has slammed the brakes on last year's breakneck pace of deal-making and a boom in the IPO market. But strong growth in B of A's consumer lending business helped cushion the blow. The bank reported a 9% rise in consumer banking revenue to $8.8 billion in the quarter. However, total investment banking fees plunged 35%. But because of the composition of its balance sheet, Bank of America is the most sensitive among the big banks to changes in interest rates and is expected to benefit from the U.S. Federal Reserve's aggressive plan to raise them.
Elon Musk took a swipe at the board of Twitter on Monday after the social media company adopted a poison pill to protect itself from Musk's $43 billion cash buyout offer. Responding to a user's post criticizing the Twitter board, Musk tweeted that the, quote, board salary will be $0 if my bid succeeds, so that's around $3 million per year saved right there. The Tesla and SpaceX CEO, who has been critical of Twitter's policies, did not elaborate on the tweet. Twitter did not immediately respond to a request for comment. Musk, who calls himself a free speech absolutist, is Twitter's second largest shareholder. On Thursday, he made an all-cash offer to buy the social media company for $54.20 a share. Following Twitter's adoption of the poison pill, Musk on Saturday tweeted, "Love Me Tender," an Elvis Presley song. A poison pill is a strategy designed to thwart hostile takeovers whereby other shareholders get new shares in the company, often at a discount, diluting the suitor's stake. Meanwhile, in a series of tweet replies, Twitter co-founder and former CEO Jack Dorsey on Saturday called out the company's board, saying, quote, "It's consistently been the dysfunction of the company." Dorsey's statement was a reply to a tweet by venture capitalist Gary Tan that said, "The wrong partner on your board can literally make $1 billion in value evaporate." Shares of Twitter have risen roughly 15% since Musk disclosed his more than 9% stake on April 4th.
U.S. stocks closed down on Monday after vacillating between positive and negative territory as investors weighed a profit beat from Bank of America against surging bond yields ahead of more earnings set for this week. All three major indexes finished slightly lower, with the S&P 500 ending essentially flat. William Houston is Chief Investment Officer at Bay Street Capital Holdings.
So I think the market is trying to find its footing. A lot of that, if we're going to try to identify and explain it, is going to be around consumer confidence. Right now, confidence is low. And so as a result of that unexpected uncertainty, folks are just sitting around trying to see what's going on. You know, as it pertains to the day, Europe is closed because of the holiday. So I think a lot of folks are waiting to see what's going to happen in Europe tomorrow, because that is what's driving a lot of the uncertainty.
Bank of America shares jumped more than 3% after the bank posted a smaller than expected fall in first quarter profit, helped by strength in consumer lending. Other big banks, Citigroup and Goldman Sachs, rose more than 2%. Shares of Tesla finished about 2% higher as the electric car maker prepares to reopen its Shanghai plant after a 3-week shutdown. Investors are also eagerly awaiting earnings from Tesla, which it's expected to report on Wednesday. Shares of Twitter ended about 7.5% higher after the social media company adopted a poison pill plan to prevent Tesla CEO Elon Musk, Twitter's second largest shareholder, from raising his stake. And shares of DD Global fell more than 18% after the China-based ride-hailing company reported a decline in quarterly revenue and announced it will hold an extraordinary general meeting next month to vote on delisting from the New York Stock Exchange.